What's going on, you guys? Brent here with another video. Hope you guys had a great New Year's. Everything was outstanding on your part, and as well as hopefully you guys made some New Year's resolutions and made sure that you maybe map something out. I know that I have my goal book right here where I map everything out for the new year, and I tried to become better at whatever I decide is something that I need to work on. As for me, trading is a big one. Obviously, as you guys know, I've been trading for about 6 years, and I've been about profitable for the last 2 years, and I've been using a lot of these techniques that I teach you guys in these live streams to basically get a lot of knowledge onto determining where price is going to be moved. So before I get into the live stream, you guys want to talk about market awareness. So as you can see that the market is going to be going into a new year, so that means that the market has a whole new range that price is going to be able to move throughout the month and throughout the year, right? So as we can see, a lot of these prices that we can see are touching lower lows and lower highs of previous lows of last year, right, of 2018 and also 2017. So as we look forward for price, I want to make sure that you guys understand that price moves in these correlations and in these awareness states, because there is a lot of different presentations that do go into consideration when price is moving in these directions. Okay, so for one of the most detailed things is that price has a market structure where it always likes to repeat itself. So if we look at USD JPY, say that we're on the daily chart. So I'm going to map out the daily chart for you guys, and we're going to look at 2017 at the same time as price was in 2017, going into basically January of where we are right now. So price right now is going to have a huge, actually let me take this, you guys, I'm sorry about that. Sorry about that, you guys. Let me just make sure my phones are off. So, that being said, you guys, when price is going into a certain area, right, as we can see in 2017, this is where price left at, okay? So, price moved into this area, and then as we can see in the same time of this year, it's pretty leveled, right? We're about maybe around 80 to 100 pips out of that same range as we were previously. So, we'll map it out. So, we're about 150 pips, you guys, from 2017 January lows to where we are now, okay, at 2019 January lows, okay? So what I mean by price moving into certain areas is that we have a understanding that the market is going to be going into a lot of similarities. These similarities are a factor of where price likes to move, because they likes to break and retest previous structure areas, as we can see right here, where this was January 5th, January 3rd to 5th, and where price was at to where we are right now. So market structure is following a lot of these different revenues. So when we are moving into the new area of price, we're looking at new market structures, we're going to now see a lot of the same terrain as we did last year. So while we're going into this new process, we're going to be able to take these into consideration on we can see market data go into the new faculties of the market structure. Okay, so that is a huge thing on where price is going to make a huge determining factor on why market levels like to correlate with previous market structures and previous ends of the year, like it did in 2017. We can see in 2019 as of 2 years later is really at the same area, right? So why does the market do this? Why does the market go into these different areas, and why does price like to have a lot of market changes on where price likes to be evolved, right? It's because of liquidity and likes to have the different market phases. Okay, so the market phase is a huge thing that we have to go over, especially in today's video, on why the market likes to go in these different structures. Okay, so we have the accumulation phase, right, where price likes to, oops, spelled accumulation wrong, excuse me. Accumulation phase is the beginning of price, right? This is either called the consolidation phase. So the consolidation phase is when price is really gathering up a lot of liquidity and moving it to another area of the market, okay? So that's the first phase we see on the market, right? And then the second phase, we see the markup phase. So the markup phase is when we see a lot of market pressure being built or being push to one side. So this is called the market push, right? We could call it the market push as well. And then we have the distribution phase. And the distribution phase is basically the same thing as accumulation phase, but it's the opposite of where the market phase was at, okay? So the distribution phase is more correlated around where we see price move from one direction, and then it has to accumulate again and then breaks to the opposite direction, okay? And then we see the markdown phase, where the markdown phase is where price then corrects itself and reverses, okay? So these are the big market pairs, and actually let me make this better for you guys, because obviously this is not mapped out correctly. So market accumulation phase. Perfect. There we go. All right, so if you guys want to take notes on this, this is something that I highly recommend you guys take some notes on this, especially going in 2019, since we are at that new level of market accumulation or market down phase. We're going to see price go in these terrains and these methods, okay? So I'm now going to map out exactly how this works and how market phases are established, okay? So as we can see that market phase 1, which is the accumulation phase, was in this price here. And I'm just going to use the arrow for this one, you guys, just so we can see how the market phases are working, so you guys can have a better description and better structure of how this actually works. So let me just remove some of this stuff real fast and then go from there. Okay, so as we can see, this is the accumulation phase. So accumulation phase, that we said before, you guys, is consolidation. This is the consolidation area of the market. So this accumulating price into one area and one structure of the market. And then we have the market up phase. As we can see, the market up phase is when the market starts to have that market push, right? This is when the buyers and the bankers and institutions and also retail traders drive price into one side of the market. Okay, so this is why we have it called the market push or the markup phase. The distribution phase is which we like to call, the distribution is the same thing as an accumulation, but it's the opposite, right? There's an opposite of everything. This is the opposite of the accumulation. It's called the distribution, right? The distribution is a part of accumulating price from one side of the market to the other side of the market, which is right here. And then we have called the markdown phase, okay? So the markdown phase is where price likes to reverse, and it makes price go into the opposite direction, heading towards the accumulation price. So this is where price is being moved from one side of the market to another side, so they can have that equilibrium, or to put a balance on where price should be moving for the exchange rates in the market, right? And this is where a lot of markets are being into factor. I say all markets go into these factors, right? We can even look at prices at oil. Oil even has an accumulation, a markdown, and so forth, right? As we can see right here, the accumulation, the markup, the distribution, and the markdown phase, right? Same thing as we can see on the treasury, right? We can see that there's accumulation phase. Well, we're going to be on the daily chart, so we're going to be a little bit different. So accumulation phase, right? Let's map it out first. So as we can see, we've been going long for this position for a very long time. So we can see that accumulation phase comes into this area, right? Accumulation, and then the market goes up and it reframes, hits higher highs. The markup phase, right? Then we have the distribution phase, and then we have the markdown phase, right? So then we can see price moves in all these areas in all different markets, okay? So this is where I want you guys to take this and look at that, and make sure you take notes on how this actually works. The accumulation, the consolidation, the markup, the market push, the distribution, and the markdown phase. These are huge, important things on how price moves and how price is actually taken into account, right? So from here, we're going to go over all of the different market structures, and we're going to go over the percentages of where I believe the Euro USD and the USD CAD are going to go for the beginning of this year, okay? So before we go into that, I want to talk about our trade that we had in the signals earlier yesterday, and how we can be able to manage that and understand why that trade was taken and how we can understand that for next time, okay? So this is basically what price decided to do. So as we saw that price there wasn't really any liquidity on yesterday's market because it was the new year, and a lot of traders in general across the world aren't going to be trading on this new New Year's Day, right? So there's obviously a phase where it's a freeze market. And then as we can see it during Wednesday, price just dropped around 162 pips, right? Making that M formation consolidation point where my price came down and made that stop hunt to the upside. Remember we talked about how they like to trap those buying orders, which I was a part of too, and then they spike price down, right? So if I were to take into show you guys market price here, they would be in this area too. Market phases were showing that higher high and higher low, okay? So where we want to see price go into this direction on showing price and momentum is when price moves from one side to the upside and it drops back down, and it shows that stop hunt dropping all of the traders from one side of the liquidity to the downside of the market, showing a huge retracement, obviously stopping out all of the buyers that were already buying in these areas, these accumulation areas, to the upside, and about, you know, quarter of the time selling the stops out. So these happen all the time, you guys, and as you can see, it hit a psychological level, which was in this area. We can see that price was moved into let me remove the drawings first. Price moved into the 1.1500 area, right? And that was a huge area of liquidity where a lot of price and momentum was being trapped on the upside. As you can see, that was a huge area previously in October and in November. So price then tests this area one more time, and then this is the third test, right? And then price then dropped back down, stopping out all the traders that were going long in this area at first. So as you guys saw the trade, that was a lost trade for us because we thought that price was going to, since we already saw a huge consolidation. And the reason why we went long in this trade, and I want you guys to understand before I go any further, is that we saw a huge consolidation area at price at the beginning of market structure. So as you guys can see, that previous market price was showing very high wicks and high lows, right? So we saw that there was more of a consolidation area. So we knew that if there's consolidation at previous highs, then we know that market's going to break out, right? So what the market decided to do, which obviously, like I say again, we're not going to be 100% accurate in every trade, which we can also could have took this information. But the reason why I didn't take this information before, you guys, because we already saw a peak formation low. So because I already saw a peak formation low or inverse head and shoulders, I know that the possibilities of price actually going towards or going against the trend is obviously not going to be a very good trade to take. So that's why I decided to go long. Another reason why I decided to go long is because I saw this nice W formation right here where price then moved and they consolidated here. So I wanted to see an upside momentum. So obviously price decided to stop out a lot of these sellers, or all these buyers, excuse me, that were trapped all in the previous ranges, and then it moved price higher and higher. So like I said, you guys, that we're not going to be 100%, but as we know that price is already going to go to the upside, we can see if we go to the daily chart, this is a perfect example of price actually going to the upside because we can draw out a stochastics, which is going to show us the volume indicator of where price is going to be at. So as we can see, that market price is already showing this higher high, right? So what we want to see is that accumulation of price is going to be very bottled up right here, right? So we're going to see it have to have a big breakout, but then that breakout's going to have to retest, right? Because if we see that stochastic goes up a little more, it's gonna burst. It's gonna have to drop back down. So what we're going to see is that price is going to either bounce and hit these new levels. This is 11600, where this was this previous high of October, and then after we see that, we're going to see that retest at 1144450, and then see that inverse head and shoulders once again, right, where price is going to come back, and then we're going to see an upside momentum, right? And this is where we're going to start to see that reversal for the upside of the euro dollar, right? Because as we said in last video of last week, we went to the weekly chart and we saw how price wants to test this previous level, because if we drew out the Fibonacci retracement levels, we could see that price was at that 50% moving average, where price was showing that nice area of support at that 50% moving average at that high, right? And what we want to see is that since we can see that retracement at that 23.6, we see that retest, or that, excuse me, that we see that resistance. We want to see that resistance be broken and then support and then test this level once again. And then that's where we want to see that huge information testing those lows and going down, right? So that's where our indicators of price is. And as you guys can see on the weekly chart, it's already showing that stochastics is really low, giving us another indicator that price will be moving to the upside on market structure as for and so forth. So this is why we are long Euro USD. We just obviously were short, stopped out on that one trade, but we're going to be definitely in the money in these next couple positions. Excuse me. Excuse me, guys. So we're going to be in the positions for the long coming into the near future and so forth. So that's my analysis for the euro dollar, the euro USD. And if you go forward and see price have momentum to the upside, we can now have this nice fluent consolidation breakout where we see price has consolidated for about a month and a half now, where price is now consolidating from ups and downs, making those higher lows and lower highs, building up that pressure, having that accumulation, right? And as we can see on the 4-hour chart, stochastics is low, so we're going to look for a long position. So that's why we went long in our previous signal, but obviously we got stopped out of that one trade, and my apologies for that, you guys. But as we can see, that price is going to start to build up that pressure to the downside and then shoot up to the upside, showing that breakout to that 11600 area, consolidate, maybe make a flag pattern, and then we're going to see a breakout to 117,500 where it's going to retest these previous highs, and that's where we're going to have a lot of profit being taken on this Euro USD chart for the next couple of weeks moving forward. So I hope that you guys got a lot out of this trade, a lot out of this market analysis when it comes to the Euro USD. And if you guys want, I will put in the description the four sectors of the market phases as well, and having that established there. So I'm going to put a screenshot after this Discord of the 4 market phases, and I'm also going to map it out for you and put that also in our in the Forex chat, so you guys can map that out as well and have that available for your toolbook going forward. And my apologies, I asked earlier with the restream, but I will be able to get you guys open and read your guys' comments in the near future. Just give me one more day to map that out, because something was going on where I guess the password the passwords weren't changed, but for some reason I wasn't able to access the restream, and I'm going to do that once again. But if you guys have any questions, make sure you put in the Discord group and you know, message me personally, Brenton Walker. I'm going to be available from here on to the rest of the day, answering any questions that I wasn't able to answer here in this live stream. So tomorrow, I promise you, I will have the restream up and running, so I'll be answering you guys' questions once again, moving forward. So going for the USD CAD, because these are the 2 essential ones we're looking for, I want to show you guys, whoa, this graph is a little too crazy. I was back testing a little too much. So let's re-erase that, okay? So as we can see previously, that market price is testing these previous highs, okay? So we see that that's May. That's May of 2017, okay? This is the huge understanding that retrace, the market loves to break and retrace, you guys. The market came down, make the accumulation, make the market up phase, make the market distribution phase coming in this area, and then it's going to make the market down phase, right? To break these levels of lows, we want to see that market break these levels and go to the downside, okay? So how do we know that price is going to retrace for the USD CAD? We can see by the range of the market and how the price has been going up absurdly for the last couple of months, where prices hasn't really made any lower lows. It's just been going straight up, or making any lower highs. It's just been straight making that mark up range, trying to retest those levels before the end of last year, right? Price was definitely trying to be compatible on their books and to be leveled, right? Where we talked about books and leveling on their books for the proprietary traders and the investment institutions. They want to make sure that their books are being compatible and they are on the safe bet on the market. So that's why you guys can see that they drove price very quickly back to previous highs to close the year off with an even book count. So now that we see price here, as you can see, this is not a sustainable trend. Just like if we looked at Bitcoin, where Bitcoin kind of made the same ultimate unsustainable trend, right? Then it had the chop, and then it came back down, right? We're going to see a lot of the same market structure and market faculties with the USD CAD, where price came up and then it drove market price to the upside. And then now we're going to see that accumulation, or excuse me, not accumulation, that distribution factor, where price is going to probably come up one more time. And then we're going to see that retrace down to the downside back to September lows. That's where we want to see price move first before we start to make any other elements or any other hypothesis for downside momentum. So as we can see, that price made that nice flag pattern, right, where it consolidated and trapped a lot of those sellers. Even I was a part of that selling trap at one point. But then once we saw that market price started to bounce up to the upside, we made sure that we got into the long positions on the USD CAD. But price, as you can see, made that flag pattern right here. And then we had those lower lows from the W formation with that second leg trap, right? Right here is that second leg trap, trying to induce those sellers one more time, consolidating price one more time, and then spiking it up to the upside just to trap those sellers one more time, and then driving price all the way back up to previous yearly highs. Excuse me, is that previous yearly highs? Yes, previous yearly highs. And then after we saw previous yearly highs being hit right now, we're going to probably see consolidation throughout of January. But moving into February, we're going to start to see that dip to the downside, and we'll see that retest of September lows, okay? So that's my analysis on the two pairs for the Euro USD and the USD CAD, the predictions of 2019. Specifically, when do I see where do I see these prices being moved? I don't have an exact date, because as of now we're going to just go forward with price action and price market structures, and just going forward with that, we're going to see where price wants to take us from there, right? Trying to predict every single move is definitely not a healthy trading strategy, just because you have to have room for leniency and room for adjustments in your strategy, right? Basically, you don't want to have everything so mapped out that you are not going to be able to take into consideration having losing trades or the market going against you. And that's where a lot of traders get caught up, where they're so focused on this one analysis that they put in for backtesting for months, and I've been that before, that they forget that the market is not going to always go the direction that you mapped out. Even if you're a trader, I've been trading as long as I have, and I've been doing a lot of high probability setups, and obviously made a program and so forth, and have taught people, it doesn't matter. The market will work on the way that it wants to work, and not just which you decide it's going to work, right? Move with the market. Don't let the market move you. That's the quote unquote hype or quote unquote ideology that we want to have for speculation investing. And I talked about how we try to structure this into an animalistic habitat, right? We want to be like the fish, right, that swim on top of the shark. We're not looking to be a huge predator, right? We're more so of the smaller people trying to get money into the bank by having these small trades consistently start to pay off by having the runs of these sharks, which are the big bankers, right? These are the people that are going to move the market quickly. It's knowing where they're going to move the market by knowing the phases and structures and the accumulation and the distribution factors that they use to quote unquote make the market move the way it does, okay? So that being said, I hope that you guys understand my market analysis on today's structure for the USD CAD and also the Euro USD. When we're talking about market structure as well, when it comes to where price was previously and how we can see the same kind of setups that happened, where you have 1 level, 2 levels, and then 3 levels, price then took all of this previous structure back, right? All this accumulation from April 2016 all the way up to April and May, right? A full year, 1 year. Sorry for my poor skills with writing. As you can see, that I was definitely not a writer in college and high school. So as you guys can see, that price was moved into this areas, and then after 1 level, 2 levels, and 3 levels, right, they took price back. And we'll even do the measurements because I love doing this, because I love to see how the market makers work. So as you can see, that this was basically a year, about 415 days market price was consolidating, and then it took it back. Price then took back all in about 111 days. Okay, so price was consolidating for about 415 days, and then took price back here in 111 days. Okay, so if we want to use the same formality or same structure, we can see that price is going to be doing a lot of the same stuff, where price then accumulated price for about 109 days, and then took it back. We're going to just go back to previous structure high where price was moving backwards. Then we can map it out from this low to this high. Price then took back their shorts in about 76 days. Okay, so if we're going to look at it from a bigger perspective, right, where we're at right now, we're going to see a lot of the same similarities and formalities. Is that price will then be accumulating. Oops, sorry, a little lag spike right there. Price then was accumulating for about roughly 148 days on this upwards consolidation range. Really kind of making lower lows and lower highs. We could say that this is an upwards trend, kind of, right? This is a lower lows and then lower highs on the upside, or higher highs, excuse me, higher highs and higher lows. Sorry, you guys, my apologies. High lows and higher highs. Price was making for about 481 days. We can see price accumulating, and then we saw that huge spike. So this is when you know price is going to start to reverse, because after you stop seeing lower lows and lower highs, and you just want to see, you can see that the bankers are just trying to really put in a bunch of money onto the upside just to try to test previous levels. We're going to see price, like, again, this is 415 days to the upside. This is 481 days. Now we're going to see price do the same thing again. In 3 levels, they're going to take back price. Probably 1 level, 2 levels, and 3 levels. And then we're probably going to see that same market trap to the downside, where we're going to make a lot of profit, you guys, because 2019 is our year. Where we're going to see then the dates then probably get taken back in about half the time, right? 160 to 170 days. You're probably going to see that downwards retracement for the downside of the USD CAD, right? So this is obviously all a hypothesis, you guys, but I mean, we can use the same structure on so many different markets, right? Where the price accumulates, right, for about a year and a quarter, and then it takes it back in just basically a quarter of the time. Does it once again, takes it about a year and a half at this point, and then takes it back in about, you know, a quarter of the time once again. This is how they make money, you guys. This is how the emulated markets are precisely designed for us to lose money, by focus, or basically giving us so many opportunities to make money just to drive us out of the markets basically in a quarter of the time, right? This is why the market decided to have this huge range from the downside from this low, because as you guys can see that this low right here, where the market made that low, was exactly at the low. If we look at back at price, where price then made the low before that range, right? That was the same time price decided to go up. As of right now, that's the same low that price decided to make that huge range. And this is not just like random. This is actually something, excuse me, this is not true. Let me re-establish that. My eyes are playing tricks on me. Maybe I'm living in a matrix. So anyway, so going back, so price then was driving in the same direction, right? As this range right here previously, this is the same area that so many traders were trapped on selling still, because they saw this huge downside spike. So they thought market was just going to retrace and then go to the downside and continue with downwards, right? A lower low and a lower high right here. And then out of nowhere, price then made that false trap leg and then started to make that upwards to stop out all the previous traders that were short from this low, right? So then now they gained all of their profits back by stopping out all these traders. And then after they have stopped out all the traders, they're going to reset the market, just like it happened on January. They reset the market just like they did now. They literally reset the market, because January they reset the whole algorithm. then it has a whole nother level to play off. And then what they do is that they play off the previous structures where market was trapped, all the liquidity was trapped of previous month, and then they do the same thing again. So that's why when I'm telling you guys this stuff, it's not made up. It literally, you can use this on all different market structures and all different prices. They were going to then do the same thing again, just like we said earlier. Price was consolidates price, right, for about 300 and so forth days, 400 days, and then in about 3 levels, they take back price in about a quarter of the time, and then they do the same thing. Then they reset the market, right? They consolidate price. It will consolidate price for about, whoops, this is not the right one. That's the pip factor measurement. We need the date measurement. So they accumulate price one more time to those previous lows for about 200 days, right? Then they trap again the buyers one more time for about 300 days. And then what are they going to do, you guys? They reset the algorithm, reset the market, and then they're going to drive price to the downside, stopping out all those traders in probably 90 days. So we're going to see, like, the next 3 months a downside in the USD CAD. So, you know, if you're a swing trader, I recommend going to the downside in the USD CAD, just because these 4 accumulation factors, or keep on saying accumulation, these 4 factors of how the market works: the market up phase, or the market accumulation phase, the market up phase, the distribution phase, and the market down phase. These are super correlated on price and how they are being measured and how they move. So, like, it's super cool stuff, you guys. This is why I love the markets, because they play off statistical market patterns, right? And my buddy who's a trader as well was just texting me the other day. He's like, dude, literally USD JPY was literally closing as of January 3rd, basically at at market structure of January of 2017. And I'm like, you're right. Like, if we look at it, literally, we look at January, look at price at May 3rd, right? It's literally almost the same thing. It's like a range between maybe 100 or 200 pips. The range is specifically precisely in that same quadrant. So we're like, all right, definitely there's a huge, like, 165 pips difference. 170. Do you understand how crazy that is? That the factor of the market is that, like, literally from a year and a half later, or a year later, excuse me, that price is literally, or excuse me, 2 years previously, that market is again at the same quadrant, percentages between 180 pips. Like, that is, like, so predictable if you really look at it, right, from a long-term perspective. So if we're looking at price now and we see that it's closing lower, then we can expect that there's going to be lower prices to be tested, which is definitely going to be October of 2016 levels, because we have, again, all these buyers that were bought during Donald Trump's election, right, when price was propped up, right, when price when everything was priced in, right, everything was priced in, right, into the economy. Then we had that accumulation factor, where really it's really all this just to take price back down and stop out the traders, right? Before then, we move price back to these levels to then induce one more time, right? So it's literally a method. It's a method, right? There's a method to this. So as we can see, that there's a huge another range, because price previously was not going to break this area, which is 1900, until the new year was going to be established, right? It wasn't going to break this area. There was just no way. There was just no way price was going to. So what they did is that they waited until the new year for price then to break this level, right? Because we saw December 1st, it wasn't going to break this area. So then we saw that huge spike down after the new year, which we'll see that consolidation probably down to the downside, and we might not even see it test this low, which we probably will, just because the market loves to make lows and then test that same low. We'll probably see market price test this low one more time before we see an upwards retracement to trap those buyers one more time, just to move price back down to these new levels, right? And then if it does decide to do that, we know that price is going to reverse and then stop out all of these sellers that were selling in this market to then retrace and reverse price in 2020, right? So I'm going to map it out and obviously put it into the Discord on the Forex chat group, you guys. So you guys will have all of these market statistics and market hypothesis that I have. So you'll have for your trading strategy, your trading momentum, right? So I hope this session definitely gave you some insight on what I believe market price is going to be going in the next couple of days, next couple of weeks, and so forth. And I hope that you guys understand where price is definitely, the momentum is going to be shot going towards the new direction of market areas, right? So going forward, let's go over Great Britain pound, Japanese yen, because I know this is one that a lot of people are trading. So as you can see that the market didn't want to break. So as you can see, I know, Michael, you had this question earlier last week if price is going to reverse or go down. So as our hypothesis shows that market is definitely going to go to the downside and retrace these lows, because as you can see, market didn't break this area, right, this huge support level until the next year, right? This is now the next year. We saw that third candle break. So as we can see, we're probably going to see that retest, and then we're going to see market test and break out to the downside and retest these lows on Great Britain pound, Japanese yen. I see that that's where, probably not even see these lows, because it's obviously the stop hunt where this is where the market decided to really trap a lot of those sellers. But we will see a nice retracement to the downside. Will price then make these lows one more time? So as you will see, we'll see price probably test these levels, and then market will come back down to make those lower lows. As you see, Stowe's very low at this time. So as you see, stochastic's very low. So we can see over justified or under justified pessimism at this time. So at this time, so market is definitely going to have that retracement correction before it decides to go to the downside, just because market structure needs to have at least test these previous highs of Stowe. I'm not really a fan of stochastics, but it does play a huge factor on market momentum and market range. So we will take that in consideration on the Great Britain pound, Japanese yen, and see where price is going to be moving in the near future. As you can see, Bitcoin, I'm definitely not seeing price going to go long for a little while now. If you look at the daily market price, we can see that price is still making lower lows and lower highs. So market came down. We possibly might see us bounce to the upside, retest lows, but if it doesn't break this 32,500 range right here to test this high, which is 4,500, we might see a downward spike even lower. But if we do see that break to the upside, and we do see price come up to 5,500 to test this structure breakout, that will give us somewhat of a cup and handle, right? A nice cup and handle, and then price possibly might break out, or it might drive price down, okay? So we're going to take into consideration right now that price is going to reverse, but as for January, we're going to see a nice consolidation leg, just like as we saw in previous market where price in January was a huge spike, kind of like that cup and handle one more time. As you can see, that cup and handle between January and February, and then market price came down and stopped it going down. We might see the same thing. Market consolidation, cup and handle, then price come down and move forward once again, okay? So this is my analysis, you guys, for today on what I believe price is going and where price is going to be removed. And if you guys have any further questions on where price momentum is going to be, please feel free to contact me on the Discord. I'm going to be there right after this, going to give you guys some signals on the USD, on the Euro USD, and also the USD CAD and on the USD JPY. I'm going to be doing my analysis right now. I'm going to go to the 15-minute chart and break that down to see where price is going to be going for the next couple days. I'm also going to put in the phases of the market also in the Forex chat, so that'll be available for you guys. So you'll have that available as well. So I hope you guys got a lot of information out of today's live stream. I'm super excited to give it to you guys, and I will see you on tomorrow's live stream where we're going to talk about the market breakdowns of where price is going to be. And as you guys can see, we might be seeing a nice setup for the downside breakout to the USD Japanese yen, test these lows of previous structure of 108.750, where we might see this low to the downside. So I'm going to take that short for you guys, put that in the Discord right now. So I'm gonna hop off the live stream right now, put that in the Discord, and I hope to see you guys in tomorrow's live stream. Hope you guys have a great day. Hope you guys have a sensational new year. That means it's new opportunities for us. Last year for me was a growing year. It was a lot of success as well, but learning a lot of things, educating myself. And this 2019 is all going to be about abundance, prosperity, growing, traveling, meeting new people, networking, and just having a fantastic year. And I hope it's the same for you guys. And I hope that we can make a bunch of money together and have some great signals. And I hope that you guys can also wish our other analyst, Raphael, a safe recovery. He's a little sick right now. So I hope that you guys can have prayers for him as well. And I hope that we all together can stay as a community and kill it and stay profitable here at Traders Profit Club. Hope you guys have a great day today, and I will see you in the Discord. All right. Bye, guys.